doing them, eyeing them. And then I may not take another one until 2. And then I may not take another one until 3, you know? Yeah, it's fine to record BLT. Let me actually turn on my recorder too. I'm gonna post this one on YouTube. So let me turn this on and record as well. There's some times that I forget to record and other times I remember. So this is great. I'll turn on the recorder when I start the back testing though. When you start the back testing. So for anybody else that just came in, I was asking everybody what were their strengths and weaknesses for the week? What did you do good during the week that you want to continue doing moving forward? And what was a weakness that you identified that you know you have to step out of and stop, continuously repeating, you want to be aware of for the next week? Need to stop anticipating and waiting for something to get taken. Yes, that's beautiful. That's something that I'm actually doing myself. You see how I say, yeah, I can get involved in this, but why wouldn't I wait until something gets taken first? And then now I have a probability of trading in that direction when it begins to reach back into whatever it is, kind of fell out of. Why wouldn't I wait until an important area we trade to? We get to an important area, and then the likelihood, even if on the seconds time frame, it stalls a little bit, the likelihood in that area is a lot higher because what just happened. So yeah, that's something that kind of working towards as well. Not anticipating, waiting for something to happen. Let me see. Started off taking impulsive trades and holding too long. Friday, I got it together. I came back and profit for the week. Hey, love to hear that. Waiting for the market instead of chasing it. Yes, yes. Because when we're learning this, when we're learning all of this, let me just bring this out. When we're learning all of this, here, let's just move some away, move some price action out. Let's say we're here. When we're learning all of this, we see that there's a potential entry in here. We see that there's an entry coming out of here. We see that there's a possibility, let's say, of an entry here because people want to use imbalances. I don't use them as much anymore. We see one up here. We see one here. So we have all of these different areas, these prominent areas that we could find an entry in and take a move. Let's say that we believe that this is going up, potentially heading up somewhere into here because these failure to take the lows here, and we're trading back up into, I don't know, 50% of the larger area that we just shorted out of. So we're looking to get back up into here. We don't need to take the whole move to get this out, to be able to benefit from it. We don't need to find a move here and hold it all the way until it gets up to this high. We can literally wait for a prime area to trade from, which obviously those are the zones taught in the playlist. So let's say we have another one down here that just formed here. we can wait when it gets to our areas of interest. You see how this imbalance here, we tap the imbalance and we shift it away. That's a wick right on the imbalance, and we shift it away to this low here. So if we're fast enough to understand the area of interest on the higher time frame and this here, we could have found a short in there. But this isn't an area that we were looking to trade from, because we understand what's here and what we're trading into. This isn't an area that we want to quickly, take as a move down, knowing that the momentum is going up. Why would we be shorting against any of this momentum going up? We already had a flip inside of here. We already had a flip inside of here. Two confirmations from two different structures to let us know we're getting into here and potentially up to there. And the reason why we say up to there is because we have this area we're mitigating multiple times. So now my thinking is, where am I going to take my setup to take my 5 points? And what is the likelihood of my 5 points working out in the area that I'm trading from in the context of the current trend that we're in? And if we're in no trend, we're in a range. Where is this going, and where is the higher likelihood? So let me put this down here too. What's the higher likelihood of me getting my 5 points? Is that waiting for us to pull back into an area and looking for a confirmation on a lower time frame to take a quick 5 points up and get out? Or is it getting a tap back in here and wanting to hold to go up to there? And let's say we do get a tap back in here and trades up, but then it goes down to here. I was in profit here and I could have closed on a small move, but I wanted to take the larger move here and ended up getting my stop loss ran. Where should I consider taking a trade from for my 5 points? Then you start singling out smaller areas. So there was a rejection here just now on the seconds time frame. You could have saw something in there to take a quick short from out of there. But aren't you shorting against the current momentum? Wouldn't you wait for a pullback into one of these areas to take up a long in that direction? Or if you're going to short, wouldn't you at least wait for something to be grabbed first and then find a short heading down? Because whatever grabs it creates more momentum for the short to last a little longer than a small tap, or for the long to last a little longer than a small tap within it. Oh, maybe this imbalance here below. This imbalance here below is a small tap, but it's likely that you can trade into the zone and through this imbalance. Now you would need this zone to bring you back to break even and hope that we go up to there. So knowing that all of those possibilities are there, where am I taking my entry? You got to have that already lined up by the time you're taking your entry. You have that already lined up. So there's the beginning of the imbalance. This little short goes down, but then what? We run up above this high right here. You see why shorting right here wouldn't have made sense with the order flow that we have? So why short is the question we ask. That's entirely true. You don't. You'd wait. So something was grabbed up there, and look at the large candle that comes out of there. Now I'm tapped into this imbalance here. Wanting to see an entry up above, and suppose this imbalance fails and takes you down here first. Now you'd be waiting to get back into break even because you're buying at the top of the range after something's been grabbed that's enough to reach us back into the bottom of the range. So you see why shorts now wouldn't make sense. I mean, sorry, longs wouldn't make sense at the top of this extended area. So now what are you eyeing? Here where we came from, and the origin of the move down below here. And that's the only two places I'm going to be looking in. Even though we have this imbalance, and yes, this imbalance can put in a new high, there's also the possibility of price reaching into the 70% of this zone. So if price can reach into the 50 or 70% of this zone, why would I want to be a buyer at the top of it? Wouldn't want to do that unless maybe it's coming to the 30 here, and I'm going to catch a quick tap off the 30 before it trades down into whatever there. You start seeing that those rules for you, it really begins to open up, only considering areas that are probable. Waiting to come to areas that are probable. It's going to take a lot of chart reading and time past. You might be watching a move for like 30, 40 minutes. Either way, you're still watching how shorts develop. So you're still learning on that end while waiting for your long setup that you want to take a quick 5 points out of. You're out. So the person in this imbalance here, because they're just so lusty for imbalances and they want to see it go up, and now they're playing with a stop that could end up being all the way back here only for 5 points, or for the high. Even let's say they were targeting the high, which that's something that you see them all against. So they're there in 5-point drawdown and over leverage, by the way, because people love to do that. Further in drawdown now, 10 points drawdown. Back in 5-point drawdown. Made it out to break even, but back in again because they're targeting the high up here. Look at how long you're sitting in this, hoping that you get out of that drawdown. So you see what I originally said was I'd wait for us to get here. Why would I wait for us to get there? Because it's nearest to a zone. because the likelihood of me finding a flip as soon as we tap the beginning or tap into the zone or just trade below it, the likelihood of me finding something quick on the 5-second is a lot higher here than it is inside of this imbalance here, knowing that we just grabbed the high to the left. So I'm not thinking about longing there. So look, now this person is 1.25 in drawdown still. So they get out of drawdown and now they're back in it because they wanted to hold to take out this high. While all of this could have been entries for them, just waiting for what? This is 30% of the larger zone that's here. 30% there. So waiting for the actual tap or waiting for a dig inside of it, but never forcing an entry because there's an imbalance there and you want to see us go higher. That's what you think. That's trading what you think. And holding this bias that, yes, we need to take the high. So we continue. That person's now in profit by 6 points and wants to see this high taken. Do they get it? I don't know. I don't remember. Okay, yes, they get the high taken now. They get the high taken. Whatever. They would have won on that, but look at how much time from the entry here, 11:15, to the actual delivery here at 11:32. All of this is potentially being added to your trailing drawdown. You're in profit by 10, even 15 points. Now it's back to your entry. That's squeezing all of that trailing drawdown out. Now this is intraday drawdown. So this is unrealized profit that you could end up in drawdown from. We're not even talking about drawdown from losing the trade. We're talking about drawdown from greedy habits in a trade. So as I said, I would wait here to see something develop coming out of here, out of this zone, as well as the 30% of this last swing. I would wait here. And if I saw something within here, then there's that possibility for me to get in. If I wanted to rush my entry and take this imbalance here, I'm in quite a bit of drawdown until the entry delivers. So now I'm in this uncertain trade that's drawdown profit, drawdown profit, 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 drawdown profit, because I'm buying high. Or I'm buying without rules. You know, so I've been working on that. You know, for anybody who's new in the chat right now, we were asking the question of is there any strengths that you noticed that you had this weekend, this week, sorry, that you want to continue to, you know, implement in your trading moving forward? And if there's any weaknesses that you saw that you know you need to change for the upcoming week, or just with your trading habits overall. Yeah, that's what I was asking. I didn't start recording as of yet because obviously I don't want to put that in the back test. Let me see. I definitely took some horrible trades this week, but after taking my time, the outcome was better. I didn't even expect to bring back losses, but I did. Hey, that's going to happen when you say, hey, I'm not trading for the losses. I'm not trading for what I just lost. I'm trading because this is a setup of mine. I'm getting in because this is a setup of mine. I'm getting in because this is a setup of mine. I'm getting in because this is a setup of mine. That's literally what I did on stream yesterday. I'm getting in because this is a setup of mine. I'm not shorting just because I see the market is dropping. I'm not longing just because I see the market is pulling back. I'm longing because it tapped into an area that's a part of the plan that I have for where I seek setups. So now people might need to develop, what setups are you taking? Define that early on. What are the entries that I am looking for to get engaged with in the market? The market is going to show its hand for that entry. So let's develop a rule. When we're in a range, let's not buy the top of the range. Let's not short the bottom of a range. If we're in a range, why would you be buying the top of it? Why would you be shorting the bottom of it if you know that we're in ranges? So you develop some rules that'll create some habits for you. So the rules on where you're entering short and long, on top of the rules of why you're entering short and long. I'm entering long because we swept this to the left and a pullback is in order. So I'm entering a long there. I'm entering a short because we swept this to the right and a pullback within this area is in order. So I'm entering that short. But you got to have reasons behind that, So that's good that you guys are noticing those shortcomings and you got to create a rule to hedge yourself against that. That shortcoming is, guess what? Your natural human emotion. It's my natural human emotion to want something and want it now, want it fast. That's me naturally. To not be inconvenienced by it, to want to see my profit and take it immediately. So what? I developed rules around that. You got that kind of impulse. Okay, that impulse can only be directed in these parts of the market. That impulse could only be directed in these parts of the market. And now you start to confine yourself to just certain areas of the market you're looking to trade, certain conditions of the market you're looking to trade. You're not looking to long everything. You're not looking to short everything. You're looking for those conditions to be met. And that's literally, what I've been doing. You guys see, I've been just trading this way. I told y'all, some people, the reason why they have issues in trading is because they're like this. They're looking at it like this. They go just like this. Oh, wait, we took out this high right here. So we're long. Jump in the buy, place their stop behind here. Immediately jump in the buy. Because believing that we're long, because we took out this inside high here. Believing that we're long, so jumping into a trade to go long. Let's see if this actually does go long. Look, right down there to their stop loss. Because you're looking at this as this high taken out. And you're saying we're going to go long, and I want to target that high up there for 25 points. And then your stop losses ran down here because of the impulsivity. Now I know for the expert traders that are here, I already hear it. Yes. Yes, we had right here, price traded up above the high right here with this wick, not this one, with this one. So if we actually go back, we did have a move back into the 50% of this zone here after this high was taken. But your ability to take a trade off of that only went here to the top of this high. So there was a trade in there for the experts that understand. As soon as we flush up above, we validate the zone. But this trade was short-lived because it just tapped here, went up like that, and then began trading down. Why? What's the narrative telling us about this as to why we're not longing? First of all, we're long in the top of the range. We have this entire range here from up here to down here. We're long in the top of the range. We already have a rule for ourselves that we won't long at the top of the range. So now I need price to take me back here in order to say, hey, if I'm going to long, it's going to be within the bottom of. If I'm going to short, it's going to be at the top of it. It's going to be after it grabs something. It's going to be after it grabs something below. I'm going to do that. So you already have those rules for yourself. And the likelihood of you finding entries within these areas, within the bottom of the range or within the top of the range, depending on what you're looking towards, what you're targeting, the likelihood is a lot higher. Now this tapped at 30% of this previous swing here. It tapped that and went up. This came back to the 50%. Had I been looking for a long inside of here, this would have already gave me what I needed out of the second time frame. Along with my rules of not trying to buy the top of the range. Not trying to buy that. So now my longs need to be down here. If I'm saying, yeah, the highest likelihood of me being able to take a quick 5-point trade needs to be within those rules. That's a rule that I have for myself now. That's a rule that I have for myself. May not be for other people, but for me, that's what I'm doing. So look at all of these opportunities after this runs and leaves in the bottom part of the range. All these opportunities. Remember, this is the area in which I said I'd potentially be looking to get involved on longs. So a long in here at the beginning, a long down into here, back on the area that we're mitigating multiple times. Look at these longs that we have within here. Any of these longs which closed in a wick that I like to see, a wick, a stab, any of those longs, I could have found an entry on the 5-second to be able to take right up in a falling market because I'm at a highly likely area within the range that I've defined. Look at this. Did we say we wait to down here as well? Look at this. Could have damn sure found a long coming out of here. Because what? I'm not shorting the bottom of the range. So I've realized that those consistent rules for myself really help each and every time. You got to have a rule before you even get into an entry. What's your rule? What's your trade plan? And that's how you enter. Not, oh, I saw the flip. I hit the button, put my stop behind here. What is the narrative? What is the why behind it? Hey, Bird, baby, what's up? How you doing? One of the OGs in here. Bird, what's up? What's up? Morning, brother. Was Canada didn't close that store. Hey, that's what I'm saying. That 5-second entry, I'm definitely gonna put out some content with that, Bird. That 5-second entry, when you get that stab, I told ProCharge asked me, where am I putting my stop loss when I'm entering into the 5-second? Because obviously those lows can get manipulated in the same area. They can get manipulated before actually leaving that 1 minute area. So he's asking, where do you put your stop at? Like I said, for me, when I get that stab into a 1 minute area, that's my confidence to start looking long. My long may be here. Look right here. My long may be here. Something like this. My long may be something in here. There's at 5 points. My long may be something in here. My stop may be something around here. Around here. But I'm looking for an entry long now because what? The stab that's there. That's letting me know that there's a turning point from the 1 minute. Doesn't tell me how long it is, but tells me that I can go ahead and start looking for a 5-second entry to go up. Now, my stop when I open a trade immediately is like this. I have a one-to-one ATM strategy. So as soon as I open it up, it stretches my stop back here, stretches my take profit up here. And based on where I entered, I could immediately have the access to move my stop up to whatever's there on the 5-second. If I'm not seeing anything within here on the 5-second, at least my stop is behind here. And I'm monitoring that 5-point watermark that I'm expecting. Now, if price goes higher than 5 and immediately comes down here, now I'm managing my stop and waiting for us to go back above that highest point so it can take me out without going into my trailing drawdown. So the 5-second entry really is the confidence is coming from this on the 1 minute, 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 but also coming from where? Not I'm buying high up here. No, this is if the top of the range is here and the bottom of the range is here, this is below the 50% portion of that range. So I'm looking for longs throughout here. That's if I don't want to trade short side. I'm looking for longs through there. And I'll take a quick 5-point entry and I'm out of there. And if that zone holds and it goes all the way up to the high, that's okay. That's fine. My 5 points is $1,000. Most times price goes over that 5 points, if I'm being honest. Most times it does. Y'all saw some of my entries closed at 1,700 profit, another entry $2,000 profit. Most times it goes over that. You know? Are you still waiting for your 30 on the 5-second? So no, I'm not necessarily waiting for the 30. A lot of the times what happens here is that when we get that stab in there, oftentimes on the 5-second, whatever runs the high to the left on the 5-second, you'll see it'll look like structure. Oftentimes on the 5-second, when we're coming back towards a wick, or we're coming back to tap into, or we're coming back to that down candle, whatever it is, we came back to the down candle here, obviously, right here. A lot of the times, right at the top of this down candle is the S&D responsible for the break on the left side. So oftentimes, I'm actually getting in on the S&D responsible for the break on the 5-second. That's where I'm getting in at. And once you see us start to rip away from that, that's often where my stop immediately gets moved up to. So on the 5-second, it's the 1 minute, it's tap into the 1 minute zone. Make sure I'm at the lower portion of the range. Make sure I see my wick entry or my wick in that zone. And then now on the 5-second, looking for the S&D responsible, trading from the S&D responsible, a quick 5 points moving out of that region, and I'm done with that trade. But again, in New York, a lot of the times it's not 5 points. A lot of the times you're walking away with 7. You see 10 points in my profit. You know, I'm not aiming for that. But it was too quick for price move too quick with not being able to bring my stop loss or my take profit to the measures that I needed to. But I know my entry here is fine. I know my entry here is fine. You know, so it starts out with where your entry is at. That's the most important thing, where your entry is at. So the most important thing for me is that I'm not buying at the top of this range. I'm not buying at the top of it. And I'm not shorting at the bottom of this range. I'm not looking for shorts in here. Not looking for any shorts. Yes, price can tap right into here and trade below and take out that low. Yes, that's entirely true. But when we're in a range and we're in the lower portion of the range, oftentimes you see hard pullbacks in the lower portion of that range. We're going down. Yes, look, we're trailing our highs. We're going down. We are going down. But what I'm doing is playing that retracement back up into the range. Playing that retracement back up into the range. Playing that retracement back up into the range. There's some people who could see shorts better than they can seeing longs. There's some people who can see longs better than they can seeing shorts. You have to know what your strength is and now put rules behind it. That's why I was asking people when I started, what's your strengths, what's your weaknesses? What is something that you saw as your strength last week? What's something that you saw as your weakness last week? Because I've been down the path of those same strengths and weaknesses too. And I know exactly what immediately solved the issue. And I was able to now move on to focusing on making money, focusing on, taking trades, because I silenced that weakness that I had through implementing something that's actionable on the charts. It's actionable. If you know your weakness is shorting, then the top of the range, don't long it. Don't long the top of the range. So, I mean, it's going to take some time to implement, but again, for me, I'm getting tapped into the zone. I'm seeing something happen on the 5-second, and I'm immediately, imagine holding a short and buying at the top, at the same time scalping. Don't make that. Yo, I mean, you could do a lot. You could do a lot. You could do a lot with that. You could do a lot with that. Holding a short on the way down and buying all of these bottoms. Yeah, that's entirely doable. I mean, granted, you got to have a hedge account for that. So with futures, you don't hedge. So if you're holding a short and you hit buy, it takes you out of the short. So with futures, it ends up being a different beast. Malika says, I want to be on every rotation. Yeah, that happens, but know what rotations are likely. Know which ones are more likely, based on whatever range you're in, based on whatever it happened. If we just took out a high, you need to know that a pullback is in order. So buying the top of whatever's just above the high, buying the top of that wouldn't make any sense because you'd end up getting steamrolled on. You got to think about it. Let's say we were, trailing our highs and lows. We have that high, we have this low. We just took out this high, put this zone here, buying this zone to go up, knowing that we have this larger area here that we can pull back into. Buying that is only smart if we have an exasperated trend. You see the market is just moving, huge push up, down, huge push up there. Buying this here only works when we're highly volatile to the upside or to the downside. That's like shorting something here. Shorting something here. Look, we're highly volatile today. Rip down here, pushed up there, rip down there like that. So shorting something here makes sense if the volatility is something that's leading us down. But the minute we've entered into a range, which we always enter into a range after 10:30, you want to be cognizant and aware of the mistakes that you're making and where they're happening. I wanted to be in this turn up here to go higher. Wrong place though. We just took out a high to the left. So if I believe that we're going higher, I need to wait for a pullback to trade higher. Not the first pullback to whatever's just below that, because this could end up being a failed high. And you bought at the top of a failed high, and now we're trading back down into the origin of the move and potentially running the low, because those equal highs now create an environment where the lows would get taken out. You buying up here with no stop loss, now you're waiting for the market to rebound you and bring you back up into your break even, rather than just waiting to pick a move lower in order to get prices higher again, if prices do go higher. But the likelihood of you longing should be more so at the bottom of a range than the top. The likelihood of you shorting should be at the top of a range rather than the bottom. And that's something that would cure the issue for us, Yeah, I'm running 10 contracts on the 5 seconds. So that also means that I got to be fast enough to know that my 10 contracts is going to fill, and I need it to fill in an area that we are pushing heavy out of. I don't need it to fill in an area that I'm unsure about, because then if I'm unsure about it, it drags me down below, and I'm hoping to get back into break even. So I'm sure about these zones, especially whether they've been unmitigated, what they were responsible for, all of those other things. I'm sure about those things. So I'm going to only look for what? The stab that goes in there. S&D responsible on the 5-second for running the high that sent that stab down. And then I find my quick 5-point entry there. I mean, I'm going to have to do a video on passing the eval anyway. So I'm going to show all of the trades that I took to pass the eval. I think it was only like 4 or 5 trades. I'm going to show all of the trades that I took, and it was all 5-second entries. So I'm going to show how the 5-second as well. But I started finding confidence in just doing that. I don't have to be in at the bottom of this move. Neither do I have to wait for the high of the move to be taken, because I know how to operate between those areas. I don't have to be in that move at all. I know how to operate between that. So there's oftentimes the 1-minute area gets taken and price doesn't come back into it. And now all of this is happening while you can't find another move to get in on, because it never came back to the area you were expecting. So you might have to wait a couple hours for it to come back to this area. And now that might induce some type of FOMO for you, where you're like, yeah, it must pull back here. So let me short out of this imbalance. Let me short from the top of this up candle here, because in your mind, it needs to go back into here before trading up. So now you're trying to take whatever it is going there, and you don't need to. You just need to find the next thing. What is it reaching into? So if it's reaching into this, if it's looking to run that, then I need to either find an entry heading up to run that, or I need to wait for it to come back to here. You know? So I don't know where this actually goes after. Let me just run this. So it does go back up to this. So it's either I would wait for it to come back down here and not trying to find an entry to get it back there. Oh, short here, get back there. Oh, short there, no, it got to go back in there. Oh, short there, no, it got to go. Why would you be going against that? You don't need to short out of any of these areas. We just flipped on the inside. We just came from the bottom of the range. Equal lows, take out the highs. You know, all these different things that's working for you. And because it never came here, you develop a bias that you need to take an entry heading there, or you need to wait for price to get back here. One is correct. The other is FOMO. And that's when you just wait. And I said, anytime a high is taken, you scrap what you wanted to do there. Anytime you get a high taken, there's a new kind of order flow getting ready to form. If that order flow takes price higher, then that's fine. Now you observe that. So we just ran this high here. Would we be buying at the top of this range? No. We'd set some rules. Now, what are the areas I like to trade with? S&D responsible here. And the origin of the move here. Why am I choosing that? S&D responsible if the demand is high, if price wants to get up into higher prices up here. Oftentimes we trade back into the S&D responsible for the shift. And oftentimes the S&D responsible for the shift is where their stops are. So if they're closing any orders, whatever it is, that bound to get a good reaction coming out of here, even if we do fail and run it. So the S&D responsible is oftentimes correlated with the 30%. Bottom of the range is correlated with the 70%. And let's play it forward. You would already have your areas that you begin looking at second time frame for price to tap into. And remember, you guys kept hearing me on yesterday's stream say, I'm looking for an entry at 620, but it looks like it may be going to 615. If you guys go back on the live stream, watch it again, you'll hear me mention those two numbers, 620 and 615. And I took an entry from 615 because I wasn't there for the tap of 620. So I said, I can't get in on 620 now because it already. So I saw 615, I got quiet, saw it reaching down into that. I'm like, oh yeah, okay, let me hit it right here. Put a limit there and got filled at 615. What would I be, why would I even be looking for this as an area of interest? S&D responsible. That's all I need. Now I'm gonna go find my confirmation on 5 second. So whoever was longing the top of the range, welcome to drawdown. Welcome to the drawdown you in. About 10-point drawdown, long in the top of the range. If you chose to be honest and have your stop behind here, you just lost 7 points. Me, I'm waiting for it to get back to my entry, right? So look, it trades up like that, and I'm still waiting. It doesn't matter. I'm still waiting. Because this is the area that I believe there's a likelihood that we get a reaction out of. All of this is happening at the top of the range, but I'm not getting into any longs. Look at this. If I chose to get into a long right here, this got violated too. And then somebody's like, oh, maybe it's the zone. I used the 50% of the zone, but it didn't matter. It still traded through it. Where were you in the market? Right at the top of the range. You just took a high and you were trying to long at the high. That's breakout trading. So look, this candle comes down and drops right in here. This large candle comes down past the 20 and drops right in here to 615. Guess what? 615 is the S&D responsible break. 615 is also 30% of this move. Also, we ran a low. We put in a high right here, and then we violated the low. So that's looking short. But something has to bring it back up into that zone there. What is it oftentimes? A zone just below the low of that. Are we in a zone that could meet that retracement back in for a short down? Yes. Could you wait to take a short? Yes. But this is my system and the way I choose to trade it. I like longs better. So if I can only see longs, where am I looking to take an entry in? In these areas that support the possibilities, the high likelihood. So it taps there, and let's see what happens after. We tap the 615 and we trade all the way up to 630. Now, could you imagine me at the top of the range wanting us to go higher and hold to go up there? And out of me wanting to take this, I end up in drawdown or end up losing the trade when all I need is 5 points and the trade ran 15. I'm not hoping to take more than that because my system is a hard 5 and I'm out. Maybe I need to set the ATM strategy to just open up to take profit at 5 so it can immediately, trigger it. Maybe that's something I need to do. But look, this is the top of the range through here. We violate the S&D responsible. So what are we looking for now? Price to go back to the origin of the move. What could be at the origin of the move? Another long. Another opportunity to find a long. Here's a little wick here forming right now. Look at that. Sharp move out of here. Sharp move out of here. Where's this coming from? The bottom of the range. Now let's see what this wick does from the bottom of the range. So you saw this went up above the high of this candle. Let me take it back there. This went up above the high of the candle and traded back into it. Guess what is hitting when it comes back into it on the 5 second? The S&D responsible for the run of that high. That's what it's hitting. That's what I've seen on the 5 second. That's what I've developed as a method of entry. Got the spike below on the 1 minute, came back, tapped the S&D responsible for the break. And what am I doing from down here? Looking for 5 and hard partial and out. Look at this. Crazy. Why? What's my rule? Bottom of the range. After something is taken, stab that's present in a zone to the left. Did this happen to a zone to the left? Absolutely. This high that put in this low is the actual down move that sent price up. An area that had a higher likelihood. My 5 is out. Whether this chooses to go back up, whether this chooses to short down, I'm out with my 5. What does this actually do? Trades back down into it. Yet again. Another possibility here. Another possibility in here for me. Why? Coming up off of the S&D responsible to the left. If I choose to take that, or if I choose not to, that's on me. But I'm in an area that's likely for me to find a quick 5-point move within there. And then take it. So I don't know where else this goes. Obviously it dropped down there, and I think we found another Yeah, we found another entry down here. All of these entries are on the live streams. We ran a low to the left. It was like a wick low or something like that to the left that we ran back. And then we saw this. Where was another entry for me? In here going up. Did I have a suspicion that this would trade higher? It'd be a large push out of here? I told you guys, yes, a reversal was coming. Not just that, we ran a higher time frame area to the left. Not just that, we took out 2 higher time frame lows here. So guess what's coming? Higher time frame pullback is coming. Higher time frame retracement. I know that we ran these higher time frame areas, ordered flows different. Now we begin to in order to facilitate a higher time frame pullback. So what did I do? Find a couple entries that were within here. You guys remember this all, had a couple of, movements in here. But this was in a range, right? So if I was longing the top of the range, the bottom of the range, look at all of these possibilities from the bottom. If I was longing the top of the range, look at all of this drawdown. Longing the top of the range, all this drawdown you end up into. Shorting the top definitely gave you some good moves. And longing the bottom gave you some good moves. But having rules about who, what, when, where, why. Swept a low, tapped into something, traded up above. Swept a high, tapped into something, shorted below. Swept a high, tapped into something, shorted below. Swept a low, tapped into something, longed above. Swept a high, tapped into something, shorted below. You see where the rules begin to create? You're only targeting these entries at either the top or the bottom of the range. And that's something that could definitely help. So there's enough people here. We can start the back testing now. It's the 2 to 3 ones that we get every day. Time can be a killer. And that's why I tell people trade between 10:30 and 3. 10:30 and 3, all of that stuff is out of its way. 10:30 and 3 o'clock. You're going to see multiple ranges within the 10:30 to 3 o'clock hour. After 3 o'clock, you better be right with your entries. But, still can get an afternoon run on most days. And if you just see where you are within that range, you're not going to be the person getting ran. If you say where you are for most days, this is an afternoon run from up here. This is, right into 2 o'clock, had this high, and you had this huge drop coming down. This huge drop. Traded up again, a huge drop again. Out of this entire drop down, did I find opportunities to long? Yes. In an afternoon run short, I'm longing. I'm longing. I'm longing. Because understanding, these things, and not just that, tap into a 1-minute area, my wick is present, find the S&D responsible, take my 5, and I'm out. If I miss the S&D responsible, I'm not getting no trade. I missed it. I gotta watch it go. I missed it already. So all right, let's get to the back testing portion now. Let me delete all of this. go back. Actually, we can just go back to well, we'll see the furthest it takes us back. There's the last. Oh, I corrupted us. Because now I see what this is moving forward. Oh, now we got to do it on a different pair. So we'll do it on YM. But note that YM's 5 is 5 ticks. 5 points on YM is 5 ticks. 5 points on YM is 5 ticks. So with 1 point on YM, it's 1 tick. With 1 point on NQ, it's 4 ticks. It's 4 ticks. So just be mindful of that when we're using the point values. All right, there we. Oh, come on! Why would this even do that? I gotta find something else. Wait, actually, I think for NQ we can go back twice. Hold on. Yeah. Yeah, so I think it's like this. So we don't know what's going on here. Yeah. We'll go to Monday, Asia. Or maybe London. Tuesday, London. I don't remember what happened there. So we'll start there, midnight on Tuesday. All right. So we're here on Tuesday, midnight, right before the London session. I can pick up my daughter. Great stuff. See you on the weekend. All right, let me turn on this recording now. I'm gonna record this for you guys, and then we'll. Oh, I think Tom had mentioned strength, allowing my multiple impulses to work for me rather than against me. Same thing here. Weakness, not waiting for the origin while testing. So, you can pretty much, use the origin, use the S&P responsible, but what you want to use is when in a range, you want to use bottoms and tops of ranges different. You're shorting, you want to use shorts from the top of the range. You're longing, you want to use longs from the bottom of it. And that might help with, even if you're impulsive, at least you're impulsive in, a better environment where longs are supported, where shorts are supported. Yeah, need to forget everything I've learned and only focus on Dave stuff. ICT is stuck in my brain. Yeah, that's what it is for a lot of the ICT students, and I let them know, hey, listen, just whatever it is that you've learned in the past from him, put it to the side, act like you've never learned it ever at all, and now move forward with only what you're being taught. Don't even use the kill zone time frames. Don't even like none of that. Oh, here's the power of three. Here's the open price of this. The new week opening gap is here. Don't use those things because it's just going to delay your progress in actually learning this. There's an entirely different set of rules that he has for his entry than I have for mine. You know, you'll see an entry on his, you'll see it work out. You'll see it form and then not work out. Versus here, you'll learn to adjust to when you see your entry and what your confirmations are and how to take advantage of it within just a very small move. I've been having a ball trading 5-10 points. And I've been far more profitable with that than and less stress with that than, what I used to. And what I used to do, I used to be taking 40, 50 points, sometimes in a 100-point move, like these large things. And you don't need to work that way. You don't need to work hard. Work smarter. You take that one setup a day and you out. Y'all know $1,000, $2,000 in a day over 5 days, over 4 weeks could change your life at the end of the month. You know that already with that one setup every day. So now he's just honing in on that. Let me see. All right. So let's start the recording. All right, so we're here. This is London, so we know that this here is a rejection out of something to the left, zone to the left. Just want to see where we are. So we're back here. I'm just going to take this as my larger zone that we've been obviously mitigating multiple times. So I know that, we could end up trading up above this high here and then shorting back into this range right here if we make our way up above this high. So that would be my framework around it. We do have smaller areas we can focus in on as well. We have this here. Change the color of this. We have that there. We have the S&D here on the 1 minute that's responsible for the break of that high. Just in case we get a whipsawing move down, we'll know where to reset. We also have this below. All right. And we have this high here that about to be grabbed. These highs could probably be grabbed too, being that these equal. Trade up, take this high and potentially this inside. So let's see, it's looking like these are two here up above. We know we just took out a high here. We know that oftentimes when we get that pullback, It's after taking out a high. So would anybody be looking to place a long here where we currently are? I could see potentially take a potential long somewhere here. Consider it. And if we are to sweep this, there's an imbalance in here that I could look to trade back into here. Even if it's going to go down like that, I could look to take a quick long off of it there. But those are my two areas that I'd be looking at. And let me just here. All right. So let's move it. Oop. See what I'm saying about the top of the range? Something is grabbed up there. You're not expecting to long there because of where you are in the market. So I mentioned here would have been possible for me just to support getting back into here and seeing what happens within here to know whether we have another move down. But look at what happened here. We stabbed right into this. Obviously, the trades I take is in the New York session, so this stab would have been a lot harsher. This is from 347.25 and moved up just a point off of it. This would be like, 6 points or something like that, 7 points in New York. Sometimes it could even be 10. So now that we have that there, also understand that if we get a failure to close below this low, they can move back up above this high. So let's forward. You see this move? I mentioned here because of the sweep of this low and potentially here. Those are two areas I would be looking for a long. Would have gotten a long from there back into this range for what I was expecting would be a pullback. And depending on what we do in this range, if you see us trade up above here, that could also be a scenario to tuck back in here and then trade up and put in a new high, being that we wouldn't have violated the low. But let's move forward. On a 5-second chart, I would have already found an entry in there to take a quick move up like that. But here's where it starts for me. Is anybody looking to take a move out of this? Out of this zone here? Because you have to know what zones you are choosing before you are placing the button on your entry. You need to know what zones am I only willing to put my money on? What zones? You have that beforehand. You do not have that when it forms, it gets there. Oh, let me take it. Oh, it fell through. Now I'm down. It's either a zone you take or a zone you don't, but you don't make that up when you get into the market. You have that as a possible entry because you back tested it already. And you saw that this held up most of the times, so I'm going to use this. That's going in there with a plan. You guys see why my little entry would have worked out? What was I waiting for, Rave? Swipe. Tap into the zone below. And that's where you begin to see some upside. So look at what we had here. I said if we trade up above this, you see this little red marker here? Put the green around it. I said if we trade up above here, then we'll be looking to trade higher. So some may have rules for, this low to be taken, and they're like, oh, okay, the low got taken, market structure shift, now let's short. They go, oh, this is the pattern. The low, the high, the low. They see it go tap back in. Okay, yeah, now to short because the low was broken. And then they get smoked on it and it's, wait, what? That doesn't work. It doesn't, first of all, no close below would end up taking the high. That's what we mentioned. But we would need to get up above here first, tap back in, and continue. So the rules were already met with both entries, with mine that I trade in from out of the zone after something is swiped, with the imbalance on this up-down candle that we use to trade higher, with the S&D responsible for taking out this low being violated, so that's so far intro to market structure, video one that you have going through here, and advanced market structure. You applied 3 of those concepts here in order to take 2 winning entries. That's in one area. So we go to trade above that high again. So now, because this is what I want to understand. So now what are you guys marking up out of here after that has occurred? What are you guys marking up? I'm not moving on until somebody answers this. What are you marking up? The high was just taken out. Maybe I need to get it in here to Hold on, let me move this away. The high was just taken out. This is London, by the way, or heading into London. The high was just taken out up here. Let me move this. This high was just taken out that put in this low. And I'm asking, what are you guys moving to? What are you marking up to now in turn take your next setup? What are you eyeing? There's different people eyeing different things. I wait for more price action and just mark the move down that just occurred. So that's this in here. This move down. So now we have three different things present here. Let me make sure anybody else said anything. Possible sells if S&D responsible for taking the high is ran. Okay, that could work too, but that's anticipation. What we see now is what we're looking to either base our next decision on, not what needs to happen to base our decision after. Because this is what live price looks like. This is all the components within live price below you or where you currently are. This is all the components that we have. And this is the data that we make our next move on. This is the data that we make our next move on. So we need to know whenever price is now moving forward. We don't have no other price action as it. But as you know, some people, when they want to press the button, they need to press the button now. They need to find an entry now to press the button on. If there's anything after this forms, if there's anything that you want to take an entry on, you need to know that the minute it happened. You need to be aware of that. Did your setup show up after this occurred? If your setup did not, then cool, you're sitting out. You're sitting out and you have nothing to do. The higher time frame you don't have access to, because that's not something that we're essentially using to trade right now. We're just using 1 minute order flow. And you have your higher time frame area here. This high going over into this here. This is going to be a 4-hour. $22. We're coming up above a 4-hour down candle. That's what this high is doing right now, coming up above a 4-hour down candle. So we know that we have our hourly zones that are present in here, an hourly down candle, an hourly zone here. So we have our higher time frame narrative. It's just without to the high. We just have this. If we sit around and we look at the 1 minute, here's where FOMO develops. FOMO develops within what you're currently seeing now. So we have the right side and we have the left side of the chart. We already marked up the higher time frame area here. And the lower time frame area is below here. The higher time frame area. We already marked this up. And now we have either price action heading to there or price action trading away from it. So we know that this is the high up here that put in these lows down here. So we mentioned that this was a target and this time is a target when we first started out, before price even made dip down into here to go. So we have our higher time frame narrative already played out. It's just, if you're being honest with yourself, are you taking a move to deliver to that higher time frame context, or are you waiting for that to be taken? Now, how do you trade? This is where the questions come in. Are you waiting for that higher time frame high to be grabbed? Then you start looking for a move after. Are you trading to that higher time frame area? Are you taking a trade away from that higher time frame area? Are you trading using the higher time frames at all? I am not. I'm trading what I'm currently seeing. What I'm currently seeing, I'm developing a way to get in based on what I see. So, keep the top of the yellow zone that has a large wick and wait for a deeper mitigation. Okay, I see. Down in here, wait for a deeper mitigation in here. Or are you talking about something from the higher time frame? Oh, okay, down there. Okay, cool. Okay, that works. And the top of this zone, along with this being an imbalance here, there's some extra confluence here to get a nice. So as far as I'm concerned, everybody else is sitting on their hands. Everybody else is waiting. Okay, nothing wrong with waiting. Oof. You're still waiting. Anybody taking a long out of this right here? Out of this move that was just created? Anybody taking a long? Negative, okay. Just move it back some. So we just still waiting around. While there's many entries here, by the way, we're waiting because everybody needs some higher time frame narrative or price to play out. And you see how long you'd be waiting? This is what I need you guys to understand. Look at how long you'd be waiting just for it to get back to the zone here. So it took 30 minutes just to get back here. 33 minutes. Are you waiting for that 33 minutes? Or are you trying to force an entry within whatever it is you... People got to be honest with themselves. What exactly are you doing? I told you, there's multiple things already here. Multiple things here. S&D responsible, last down move, wick that's there, larger 30% of the zone is there, 70 is down there. All of this right here is already enough price action for you to figure out what you're going to do, because every zone is in here. Every single zone that I teach is in here. The down candle, you got the wick that's in there. You got the larger down candle or the larger zone that was just validated with the close up above here. You got these swings that you're counting from video one. I mean, from intro to market structure. You got these swings in here. You got the run of a low in here. So there's all of these different things in here, and now you got these swings that you're counting here. Everything is there, but we need more time to see more price action. We're trying to figure out where we could develop an entry from. And let me put this fib over the top of this. To the bottom of that, okay. And we go forward. Anybody entering here? Because at some point, listen to this, y'all. At some point, you guys have to press the button on something you see. No matter what time it is, you guys have to press the button. And all of these setups here, it's the same thing down at the next level. It's the same thing down at the next level down there. It's the same thing in New York. It's the same thing in Asia. All the same thing. It's doing the same stuff over and over and over and over again. So if we haven't seen an entry as of yet that we could potentially take, then we need to go back to, watching some of the core videos that's in the playlist. Or maybe it's just that you're willing to read price. Read price until you see something, that you're absolutely positively sure about. But as I mentioned over here, there are a ton of entries already in here. So at some point, a decision has to be made with these zones that are drawn out. Candlestick structure can give me 5 in specific areas often. Yeah, five easily, and you just write out 5 easily. Yeah, on the 5 second. So you'd be entering on the 5 second through here. Buy at the 70 tap below. Okay. Tom said yes. I'm conflicted because when I first learned how to look at price, my natural impulses wanted to reel everything and be right with everything. But as I slowed down and I've gotten better and more precise, but now with this new Take 5 methodology, it's like I can. Yes, exactly. Yeah, you're right. That is the thing that changes everything you know. Because you could see a flip and the delivery of that flip could be like 30, 40 points, but you see the flip, you're only in it for 5. You can do 5 everywhere on every flip. Yeah. So I completely understand that. let me, so see how this would be successful already for anybody that chose to take an entry on this. If this was New York, this entry would have been a lovely entry up that would have ran like 20, 30 points when you're talking about New York ranges. But what was the thing that would have had you fishing below in this area? All the different things that are happening within here. The last down candle, this is us trading back into 30% of it, the 50% of the zone, the larger zone that we have up above here, the tapping into the up-down candle, beginning of it right across here, saw equal lows below here that would have ended up violating the high. You know, so there's a ton of stuff already there. Not saying that price can't just come back down and run this low and then trade up. That's a possibility, but you had to start on being able to look for your 5 points in there. I just noticed our candles are a bit different. The red zone that was marked looked like it was tapped at the 50, but it didn't happen on my end. Which zone is that here? Right there? So here it wasn't, it didn't give it looks like it didn't give the tap at the 50 here. So this tapped the 30 here, and then when it came across, it tapped the 50. Maybe it's because this is London, so with NQ, it's reading like this. There's a lot of gaps in here. If I remove the no gap candle, you see all of these gaps? There's a lot of gaps in here. Throughout the London session, throughout Asia, stuff, a ton of gaps. So maybe might be the actual thing that I'm charting on versus what you might be charting on. Yeah, it could be a little different. So look, we have this now, and let's play it through. This traded back down. Nobody mentioned if they would take shorts here. It's fine. Is there anywhere else that anybody's looking for an entry? I know, some of you guys mentioned a 70%, so I'm still taking that into account. Is there anything else that you guys see? Because this is a full trend. A full trend going up as well as a trend going down. This is a trend here. There's 1 hour that's already gone by of data for. So far we've been sitting here for an hour and we don't see anything. It would feel a lot longer if you're sitting and reading price, but also being honest with yourself, there are some areas here that you would look to expect to get involved sitting there for an hour. There are some areas there. It's just that we impulse and lose in those areas rather than having those areas defined before they even show up and say, yes, here's where I would take an entry. Yes, I would potentially be looking for an entry down here in New York, especially with this down here like this, especially with it tapping into each area 30, 50, 70. I would have already gotten a couple entries through here for a quick move up and I'm out. But if you don't find anything, then you might need to, this is an hour worth of data already. This is from midnight here all the way over here to 110. So if a whole hour has gone by and there's nothing that you can look and find an entry on, then backtesting and watching the videos might be something that should be at the forefront of what you should be looking to do, what your plan should be. Backtesting and going to watch those videos again. Having another run through of those videos again. Doesn't matter if you saw it, doesn't matter if you, having another run through of the video should be in order. Because this is an hour that has gone by already. So many zones that's already created. And you know that when you're actually trading in New York, you're taking entries in some of these places and losing them or winning them or whatever it is. But this is an hour, more than enough data. Give us what it is that we're looking for, that one setup, that one trade. There's multiple points of structure even within here. But let me go forward. Double bottom, fail to close low, buy it. Hey, that's good. That would have been a good one. So take out that high. Anybody shorting from that high up there? You guys must know what you're doing when you're doing it. The time really doesn't matter. What matters more is that you know what's happening. So tap into that imbalance to the left. Look at this. Shakim is the only one that mentions she's and a short from up there to down here would be like a quick 40-point run in a New York session. A quick 40-point run heading out of there. Remember, I said this is structure. So you have this low, you put in this high, you have this low, you have this high, you have this high, you have this low, this high, you have this low, you have this high, you have this low. You put in this high, failed to close above, trades above the trades below, sorry, the S&D responsible for the break up above, and then what? We short back to the origin of the move. So then what? We trade back up to the top of the range. And there's a short coming out of here. Because we said what? Top of the trend is to look for, or the top of the range is to look for. Bottom of the range is to look for short, for long, sorry. So we trade back down. Anybody see anything they're looking to do? If anybody was long and previously down there, are you remediated times and you're unsure of whether that's going to hold or not? So now that we're below here, we're in this 70% area that we discussed, that some maybe have been waiting on. Now that we've tapped in there, perfect spot to buy. Buy 70, exactly. Buy double bottom. So your entry worked out. A New York entry like this is gunning for like 20, 30 points. Gunning for that. Coming out of this same thing here. So let me move this over because I still have this area over here. Potentially getting here. It's the area I would be choosing. You guys bought the 70. There's 3 of y'all there buying to go up. And that's perfect. Perfect area to start looking into as well. Not just that, the sweep of a low right in there taps into the zone and then trades up out of it. You gotta be able to see this, interpret it, and make decisions on it. See it, interpret it, and make decisions on it. See it, interpret it, and make decisions on it. So this looks like it's still potentially short. On the higher time frame, we are between a range of this high up here and this low below here on a higher time frame, on a much higher time frame. On the time frame that is below that, we're in a range of this low down here and this high up here. So we have ranges within ranges within ranges. On this time frame, we have a range of this low and this high up here. So we're in multiple ranges, and understanding that needs to be at the forefront of where we're getting in and why we're holding our entry, how long we are holding them. So let's continue because this does look like it's going to sweep some lows below here. Are there any areas get involved in through here? Any other areas you guys looking for? Because you got to have this stuff defined. It's already there. For when the market opens Sundays, for when the market opened Mondays, it opens Tuesdays, whatever it is, all of this stuff is there, and you have to have those areas marked out already. You're not just going to come in and be like, what does the market give me today? Okay, I'm going to make $10,000 and try to force a tap. You got to look back and start to see the different areas that are there, and now where to place your longs. Now where you're looking for shorts. If you don't have that, you're not chasing this down, and then the minute we get something like, you're like, oh yeah, okay, I'm going to get in here and take it up to run this high. Not ever looking back here for what we're tapping into. That's not possible. And if you trade that way, that's why you lose a lot. Because you're so fixated on this without understanding this back here. You're not longing just because you see that. You're not shorting just because you got into your order block and now you're hitting the button because it's there, and then you're going to hope and pray. I saw my confirmation. What area was it in? Anybody long in here? So for me, here's what can occur for me. There's a possibility that I see price going back into here and then trading back down here and then up there, and it goes like that, coming out of the larger area. But then you could just have price tap into here and come and run this up above here and then trade back below down into something here. But you have to know what area you're going to begin your long. For me, a long right here looks promising. But remember that for anybody that doesn't know and they're still waiting, you've been here now with 2 hours and no entries. Is that something that you do in New York? Sit on the chart for 2 hours and not take a setup? Your setups don't just show up to you on the right side. They're placed within narrative of the left. So we need to understand enough that we can wait for price to get to our area and then take a trade. We don't want to force something that's not happening. So now 2 hours into the session, you still have no idea, what you should do or how far you're going to go. That could induce some serious FOMO for you. Exactly. That could induce some serious FOMO for you guys. 2 hours later with nothing. You have to know about all of this happening. I mean, you won't be at 2 hours and nothing, Shakima. You already decided, a long within here that was successful, a short up here which was successful. You already sitting on 2W. And if that was your day, that's your day. But if it's not like you're sitting there with 2 hours and you have no idea what's happening. So let's continue. So anybody that's long here, if you did not wait for a confirmation and you just pressed the button because it got there, you were looking to try to get out at break even here. And if you didn't, you're currently in drawdown. If you were waiting for confirmation, like something like this, take out a high, tap back in, and then trade up above, in an area that you were looking for that to happen, you might have found an entry within here. And there might be somebody else waiting for us to, well, we already tapped the 70% here, and you see a flip above here. And it could very well be looking to take out the 2 wicks that it just put in there. But you already said to yourself, here is where I'm going to begin to look for longs. And I can take a quick long out of these areas because it's in an area where potential long setup can occur. Does it mean that I'm holding on until the high is taken because we got down in the 15-minute area, got down into the area? No. So you have it planned out beforehand. Good bounce off the 50, good bounce off the 70. And now a nice move heading up out of here. Like I said, there was a flip in here. That's looking promising. Coming up for these 2 wicks here. But where did that start? It didn't start here. It started understanding what I was in to the left over here. Started with understanding that. This tapped into the 30% of this yellow zone that I have here. And we traded up. This came back to the 50% of it. And now we traded up again off the 50. But the whole time we began looking for long because now we've entered into an area where we begin looking for long. We've entered into a portion of what? The range portion of the range, the lower portion of the range, where we could be looking for buying up. And that could assist us with our entries, our 5-point entries that we're looking to take, our 10-point entries that we're looking to take. We talked about this being a 4-hour down candle here. So we just traded back into a 4-hour down candle. So there's all of these different narratives that we have to why we're going long there. And for many of us, we were rewarded depending on how long we want to take that move or whatever it is. But we had to know it beforehand. We needed to know it before it got there. We needed to know it before it got there. Not when we see it, because when we see it, oh, this looks like a flip. Wait, this looks like a flip in here. Wait, this looks like a flip here. This might be a flip here. And by the time we get down to here, we're scared to figure out if this is a long to go up back into where we came from. So now what are we doing? Shorting in here, shorting there, shorting there, shorting there, when we already got our flip out of this. We're shorting everything down. But this is London Open, so let me see what London look at what London Open does. Look at what London Open does. Assist with the narrative that we already created over here. We didn't go to a higher time frame to look at what the daily high and low is and have London kill zone assist us with the draw on liquidity to the... No. We didn't need any of that. We just needed to know where we were and when we would begin to time those trades that are on that side of the market. Where are we mattered more than what was coming next. My man said, we violate the S&D responsible, fly it. He said, we'll go down. That's exactly what happened. But that's anticipating versus what we're looking to do now. So there's a lot of price action that already happened within a lot of. You see how a short here barely gave you anything. A short here barely gave you anything. I'm not going to. So you get up to here, and what is this? The top of the range. Well, that short looks a little larger at the top of the range than at the bottom. These longs sure do look a lot longer than at the bottom of the range than at the top of. Now we take out the high. Coming from what? A 4-hour area that we mentioned we were in. Didn't need to go to the 4-hour to look at how the sticks look, nothing like that. We know where we are. And if you look across here, failure to take the low. So what could be happening on this London session? Not saying that we're forcing it there, but the narrative is looking this way. Now that high that we mentioned over here has been taken. But imagine trying to get into an entry here and force it up there. Oh, let me long here, let me long there, let me long there, let me long there, let me long there, let me. And now you out of coins to long here. And if you did gather anything, what you be trying to do is short out of here, short out of there, short out of there, short out of here, short out of here. So we trade up and take out this other target we created. We created two targets. It was just one here when we first started, and then the one up here. Building the narrative out, though. So we take out this one here. We move the next one up to here, right at this high. And we're not forcing price to get up here because we know we're what? At the top of a range. So there's more of a possibility of a pullback at the top than to try and jump into a quick long here and take out the high, and maybe we're not ready for. This is how it's read in real time. This is why I'm marking out these little areas below, showing you these different things that are here. And then when we tap into them, we start on the bullish side and we're like, well, we're bullish again. It's heading up there. Can you highlight the smaller down move? Yeah, yeah. Here? This one right here? Or are you talking about the one in here? Oh, the one in there. Okay. And see that's following price. Because even if this could be tested again, does that mean that you have to hold on to a move coming out of here to in turn go up and take out that high? No. But this is where you begin to look. instead of trying to time this here. Is this short? Let me see if I could short down there. What if it taps right on the hem? Now your stop is ran. Instead of waiting for the market to come to you. So let's move forward. You see any of these shorts you were taking in here, quickly trade it back up, try to get you at break even, quickly go into profit and then back to take you out at break even. Any of the entries you were looking to go short within here, if you weren't there for the initial tap at trade down into here. We swept this low right here. We swept that low, which there's a possibility that we can sweep this too. And the reason being is because this larger down move that you mentioned, Shakima, is responsible for the run of the high. The larger down move, because this large move here is also the last down move on a higher time frame. But what created that down move? This portion here. So now you could also use your fibs here and look at what the 30% lines up with. The 50% of the S&D, also an imbalance present there, also a little down move inside of here that we could actually swipe as liquidity and then trade back up into the range to come and retest here if we are still going short. So there's a ton of reasons as to why you could, look in this area. I told you we have this move up here, but it doesn't necessarily mean we're just going right there to go and take that. You see, we take the high. We initiate a pullback. So you see this move up, this large move up? When did it occur? After these two lows were taken here. You take your fib out and you put your fib on the S&D responsible, and where do you hit? 30% of it. But what occurred first? Swipe of the low and then quickly move its way out. Flips up above the inside high. Now you got to flip. And it's quickly making its way back up to the top of that area. So this is a good play that you drew out, Shakima, the S&D. So look at that. We drop back from the top of the range. We drop into here. Now sweeping these lows here. After something is swept, there's not a possibility of seeing a move back into here? So now instead of FOMOing longs after a failed zone above, This zone failed to put in a new high, so we expect it to come down to the 70%, but we also see an equal high up here where one of the lows came here, so that took out both lows. Now, if we're looking to go long, we know where to begin to look. So let me move it forward. And look at this. Even if this ends up sinking further down, look at where. Look at what happens to the where. The amount of opportunities the where gives you. We take this low out. Why would anybody be looking? Go long here, go long there, go long. Let's take the rest of it out. The narrative was already created. We drop down in here and look at the amount out of here. Far more green candles than red candles in. And again, I said, even if we come further down, look at the amount of longs that was possible in here. So, I mean, obviously next week I'm still going to be doing the directional, entries with you guys. That's pretty much what I was doing Friday. If you guys missed the pre-market Friday, you guys should have been here, man. That was something. But the directional part of analysis a lot of the times is extremely beneficial to those who are learning, but it's extremely crippling for people who just choose to rely on it and not learn. So that's why I don't do it often. I make sure that people are learning, because if I'm not present, you're going to have a hard time. You're going to have a hard time. This all looks simple as I'm doing it, but when you're actually in a live market, it doesn't look like this. It doesn't look this easy. It doesn't look like, oh, yes, I can put a long right there. I didn't talk to y'all about there were plenty of shorts. I'm just choosing to stay away from shorts because it's not my thing. It's not what I do. I'm a long. Especially in these markets that be falling, the pullback sometimes is extremely hard coming out of those areas. Rather than chasing continuation, and it ends up not being one. So let me move this along, see what we get out of here. These opportunities are endless, man. And this is us going into New York. And look at what going into New York looks like. The low that we have down here, remember how we said we just put in a high? The low that we have down here that respected the previous low, we have a low here respecting this low. Right here. So what could be a target for New York? This already went into this is 8:30. What could be a target for New York? What could end up happening as soon as New York Open comes in, New York Stock Exchange Open, what could end up happening when we open? Wouldn't that be a possibility? after creating this whole narrative, even if we open down here and we go down here, what could happen just after open? With a narrative already set like this. I don't know what's going to happen. I don't remember. You just move it forward and see. So look at what New York did. Stock exchange opens. Stock exchange grabs the high, taps into the zone that we have back here. And what did I say about the top of the ranges? Especially after something is grabbed. Are we looking to long what's just below the target? What's just below the higher time frame area that was taken out? Are you looking to long that? No. So then that means New York Open comes 10 o'clock. Oh, what we longing in here for? Long. What do you think the target is after this is taken out? We just ran these highs on the inside. What do you think the target is? No. Seeking lows, right? Started running up all of these down here. Top of the range. Look at this possibility at the bottom of the range here. All the bounces we getting at the bottom of the range. But what's the target? The low at the bottom of the range is taken here. Tuesday Asia takes that low here. After New York session took this high here. Top of the range, bottom of the range. Top of the range, bottom of the range. Top of the range. We start to understand now where, where we should be focusing energy to long and energy to short. It's going to appear far easier. So you see, we take out these previous lows. Exactly what you mentioned, Shakima. Take out these previous lows down here. After we take out the previous lows, we swipe something. What happens? Oh, now it looks long. Now, this is Asia, by the way. But if I'm learning narrative, then as long as I build it and then follow it, it becomes easier. So knowing how to draw the zone is half of the work. And then zooming out to see where you are in the market and having a set rule. What's my rule? I told you guys what my rule was. I said my rule is that I'm not shorting the bottom of a zone, and I'm not longing the top of the zone. That's my only rule. So if I got to wait for it to come all the way back here, start to bring itself back here to long, that's what I'm going to do. So we see that our narrative before New York opened happened, and then it brought us back down to there. We have our higher time frame areas marked out. And we are literally on the 1 minute working within the higher time frame. Look at this. Here is now the bottom of the range. So we had little movements within here, whether it's the 50%, whether it's the 30%, both of them yielded moves off of it. But then what? We came down to swipe this low, take it out, take out this other low below here, and then we tap into the 70% down here. This just ends up being the origin of the move. But could this just take you up above these highs and then short? Yeah, it's possible. But I'm not up trading these time frames here. This is London. I'm not up trading London. But if you are and you zoom out, what could London possibly do? What could it be reaching into? We have a low down here. We have a high just up above it. There's a possibility we can take out these highs too. But once an objective is achieved, the market reverses. So now we're in the bottom of the range. And the top of the range is up here after these highs are taken. So when you observe London, draws itself down into this previous low here. And after running the low, you get bullish momentum. And not just that, a range. You end up getting a range from this low here to this high here, back to this low here. So London is accumulating underneath a supply, a higher time frame supply. So if London does this, London's target was this low. We took it out. We began to accumulate below the low, video 6. And we know that the higher time frames are still intact. High up here, low down here. We traded below it. We put in this high here. It brought us to this low here. There's a possibility that New York could be in momentum to pull back and then make a continuation down. So whenever a new session opens up, because we read all of this narrative here, any day of the week that we get into the market, we should all of our things marked and know exactly what price is potentially doing next based on what has already happened. So London took out that low. We're heading into New York now. So this is still London, by the way. New York comes in. What does this look like? You'll see me draw it all the time. So though we have our zone in here, we also know that this is something that's been getting mitigated multiple times. So there's a possibility that makes the high of this trend line here a target. Now, with 916, let's see New York open up. But remember, bottom of the range, top of the range. Bottom of the range, top of the Whoop! Why did we take out this higher time frame supply? Video 6. See London accumulating underneath the lows. New York opens up. London morning time has, towards the close of it has failure to take out the lows. Has us accumulating underneath a higher time supply. And then this opens up. Maybe this market open. This was ferocious. We shoot up like that and what? Take out these highs that I was expecting. Not so much this though. That was a large lunge. Wow. But you see, London already had its targets of taking out these lows here. London session put in this high, fell below, failed to take out the low, and we snap on these targets behind us. So each day there's a particular objective in price each day. And it literally comes from knowing where your highs and lows are and what range you're present in. So now we get this huge push above this recent high. Back here, this old London high. And this low here. This would be a daily time frame down move into price trading up above it. So we just took out a high. Would we be longing this here? Even if price bounces off of it, doesn't matter. Would we be longing that? Is that a quality choice for a setup? If you already can have an hour, 2 hours go by and you price action is, would it make sense to stick along here? Just with the basic rules that I've given myself, no, this isn't a long. Maybe the swipe of it. But no, it isn't. You see how it trades below it? Though we do get a move off of it, a down move off of it, trades up. What are we going to do? Violating it. Why? What just happened? Part of my rules that this is not something I'm taking. And when you develop rules around a trading plan, you're going to see more success. You're going to see far more success being rule driven. The logic in your entries should be something that you've back tested over and over and over and go back test that one thing. That one thing. Back test that one thing. So anytime you see it show up, if the conditions are met, that's your entry. If the conditions are met, that's your entry each and every time. And then understanding that with those entries, what would I need to see within my entry to get involved? I can see my entry at the top of the market. Does that mean I'm longing? No. We'll wait until it gets to the area of price that I see price reaching into. This coming back to top here is the 50% of the zone. Trading back into the 50% of the zone created after this high was taken out. This is a 50% tap here. I was not longing out of here. But after something swiped, can I find a long? Hell yeah. Then you get to the S&D responsible here. From 339 all the way up to 390, 60 points off the S&D responsible. All I need is 5. I'll find the next entry somewhere else. So you don't need to go to any other time frame. You don't need to, make sure you're in a 15-minute zone, because in that 15-minute zone, then you're going to be able to 15 move. You don't need any of that. The truth is, all you really need is to know where you are, know what kind of, am I a person who shorts or longs? Okay, if I'm a person who longs, here's the areas that I'm limited to long, nowhere else. These are the areas and nowhere else. And once you stick to that trade plan, you can come in here and do this each and every day with the simplest of things. So let me I turned off the recording there. That wasn't as comprehensive of a back test that I used to do when I was trading, simply because we're an hour into data over here, an hour, 2 hours into data over here. And a lot of people still have no idea about whether you can short or long, whether you can take an entry out of there. A lot of people still have no idea. So it's not really easy to back test entries if a lot of people don't even know where those entries are coming, why they're there. It's essentially just me back testing. And I don't need to back test because I know exactly where to get $100-something away from passing a $9,000 profit target in 3 days. I don't need to know what's going on back here, but I need to know what's going on, and I already know what's going on when I open up a chart. So it sounds like some of you guys need to back test. So a whole 2 hours can't go by and you have no idea what's going on. These ranges are smaller. These ranges are smaller in here, but it's still possible to take plenty of trades off of it. This entire thing here. This is Asia leading into London. Still entirely possible, because this would also be London leading into New York, or New York leading into Asia, then down into New York. You need to understand this. There was multiple trends in here. Bearish ones, bullish ones, bearish ones, bullish ones. If a couple of hours can go by and you have no idea the multiple trends we've already, switched in and out of, then, that's how your day during New York is going to look. That's how your day during London is going to. It's going to look like hours going by and you not knowing. And then when you finally say, you know what, let me just take a trade, you FOMO into the wrong area and get smoked. All these things getting tapped into, and I knew it was going to tap. So 2 hours went by, I still didn't take a trade. You know what, let me just go ahead. Largely due to not understanding the concepts. Everything that I teach, both past, present, and future, showed up in this. Right here. Everything from this low to this high, right back to this low again. Every single thing that I teach, everything that I display to you guys, everything that I show you guys within the time frame that we're often trading in, it all showed up there. So if we can go through that and you guys have trouble figuring it out, then it speaks to a larger issue of, are you guys really backtesting? Are you guys figuring out your way through the material? What are you guys actually paying attention to? Are you guys using structure or not? To see no zones inside of that area at all, you guys need to get back into the playlist, and that's not to all of y'all. Some of y'all was interactive. Yes, you obviously aware of those areas, and that's why we find the success we do. But that should be far more interactive. I gave you guys the zones. Nobody wanted to answer. I gave you guys the zones to trading. Nobody wanted to answer with the zones present. Didn't even ask you what to mark up. But with it, you got to be able to say, yes, I'm going to short here. You got to be able to say, yes, I'm going to long there. If you can't even say yes to longing or shorting somewhere, and it's a zone I drew that I know I experience of what I've taught and how I've implemented that, then that, it screams, somebody's sort of behind. So of course we got, the interactive ones. You guys see them all here on the thing. Those who are not interacting, it seems as though it's from a place of ignorance and not really fully understanding the concept. And if you don't, you're always going to ruin yourself. So you have time to study, you have time to watch these videos, you have time to go over them. The same stuff I'm teaching in the videos is the same stuff that the market is doing in real time. In fact, the videos that I'm doing it in real time, it's going to print like that again. That's why every single day I can come in here and just draw up a narrative for you guys and then immediately start to execute within it, because it's doing the same stuff. Whether we're short, whether we're long, it does not matter. It could be a day where the market is falling. As soon as we enter the range, doing the same stuff. A day where the market is bullish, longing, is still doing the same stuff. At some point, we're going to get a reaccumulation. At some point, we're going to get a redistribution. And all we're doing is trading all parts of that accumulation, all parts of that distribution. So we know that the trend is a part of the manipulation. And whether it's accumulation or distribution, those two things, if we don't know how to trade that manipulation, when does the manipulation happen? The kill zone hours, the London Open, the New York Open, all that. That's when the manipulation occurs. We learn how to trade the rest of it. So we sit out, let everybody get manipulated and shaken out, and then we go in and we accumulate along with them. We distribute along with them. But if you have no idea what's happening, then you can think that we're in a distribution and we're really in an accumulation. You can think that we're in an accumulation and we're really in a distribution. Those two things are ranges. So I'm going to release the back testing video. I'm going to download it to YouTube right now. I'll make sure I get it over to you guys. But you guys got to get back in that playlist. All of the zones that I drew is all stuff I taught. All stuff that's in the playlist, all stuff that's in the videos that you guys watch. I'm not going to be here calling price every day in August. And I'm not going back to public either. Might go back sometime in the fall or sometime in the winter. But you got to be able to interact with the stuff that's being given to you. I always post zones in here for you guys. I always post, whatever it is from the higher time frame to the lower time frame, whatever. Always post those things for you guys. But even with that, you got to be able to, Dave, please know it is very beneficial, even though you get that idea. Yes, I'm thankful for that, even for that feedback that it is beneficial. I know how beneficial it is to have a system and then be able to show the system in real time, be able to actually give you the like, here it is right here. That's where your focus is going to, and now here's where you begin to set up. I know that's super beneficial. But on the days that I'm not able to do that, the days that I'm not here, what happens then to people, Like you lose everything, all the progress you created, because you created it on somebody else's, calls, rather than you actually seeing it when it's happening for yourself. There's so many people out there, you hear them every time I stream, they talking about accounts they blew and, oh, I blew this account because of this or because of that. No, a lot of it has to do with depending on somebody to tell you the direction and not being able to execute it yourself. I'm always going to be here for the direction. You have to be able to hit the button in that area. And it's going to come down to what? It's either you press the button and you made money, or you press the button and you lost, or you did not press the button and you waited to press it on your own and you end up losing. So I'm going to be here always to showcase the concepts that I teach, because it's the only thing I know. I don't know anybody else's concept. Be like, oh yeah, well, the thing with that. I'm just like, hey, well, here's the way I see it. This is how, the market operates. This is where I'm looking to enter long here. That's the only thing I have. I can't push the button for you. Neither can I tell you to push the button, but I can show you where you begin to look for that idea of whether you're going long, whether you're shorting, whatever it is. But the days that I'm not here, you also got to be able to do that yourself. You also got to be able to perform that yourself. Or else whatever lifestyle you're going to create out of this is going to be built on somebody else's availability. It's going to be built on someone else's availability. That's not true freedom. You get money in your hands, but it runs out. You get the actual skill for it. The skill for it. And nothing anywhere could shake you. You can go to another country that you don't even speak their language. But guess what? You know how to operate within whatever it is you are able to do and still be able to live a free life? Is it truly freedom if it's dependent on somebody else being correct? Because you can't figure it out yourself, or you don't want to put that much emphasis on yourself to David's correct. We need our own thought process regardless. Exactly. Exactly. You need your own thought process. But guess what? With the zones that I draw, those are the same zones y'all gonna draw. The same zones you guys are gonna draw is the same zones you see me drawing here. That down candle on my chart, the down candle will be on your chart. That hourly high on my chart, the hourly high is on. But you need to have a thought process that supports whether you're going to get involved in that specific area or not. You need your own thought process looking into that. Or else you're just going to be jumping short because it tapped the line and then you get smoked. Jumping long because it tapped the line and then you get smoked. So you need to be able to, I'm teaching you guys how the market moves entirely. This is the way that the market moves. Now it's up to you to find a method or strategy within that to execute trades on. You still need to find that. That part is still outstanding to you. I know how the market moves. I remember how it moves. That's why I come here and do this every day, because I know this like the back of my hand. I know. It's like saying, it's as normal as saying the ages of my kids, saying my address, saying what age I did what is just as normal. As soon as I open it up and look at it, I know exactly what's. Give me 2 minutes, then we ready to go. And every move after. But if I'm not there to do that for you guys, you end up being long when we're short, being short when we're long, and longing in areas that it's the end of the pullback. Shorting in areas that it's the end of the pullback. Or shorting in areas that's the beginning of long. Longing in areas that's the beginning of shorts. The thing that I'm talking to you guys about with the range, I haven't depth with it. I'm gonna, try to do that over the course of, next few days and even try to create content later on with it. But you got to have some rules for why you're getting in. And it can't be, he drew the box, I'm waiting for it to be tapped, and then I'm going to get in. What happens when the origin doesn't hold? What happens when the S&D responsible doesn't hold? Where are you looking for your S&D responsible to be tapped? When should you use the S&D versus those things have to be ruled out for you within the way that you see the market, your own thought process of whether you should stay in that trade. And then when you have the logic applied to it like that, you're not so scared of taking 10 contracts. You're not scared of taking 30 contracts. I'm going to buy another evaluation next week at 300 because I might as well start trading 20 and 30 contracts soon, because 10 contracts feel like nothing. Like, oh yeah, that 10 there. Okay, yeah. What if I'm able to do it in far less than 5 points? What if I can do it in 3 points? What if I can do it in 2 points? Why not just do it in 2 points with 35 contracts? What? The play is right there. It's the same move. Why not do it with that? So I'm gonna buy I'm gonna get a 300K challenge just to start upping the contracts, doing 20 potentially, doing 30, because then I can just take one trade a week on 20 accounts and then live life doing whatever it is I want. I'll come back in 2 weeks and take another trade with 30 contracts. So So yeah, man, you're not scared of trailing threshold. Well, so the trailing threshold, let me just explain this and I'm out of here. The trailing threshold is this. If my trade goes up 25 points and then it comes back down by 10, let's say it comes back down by 10 and it takes me out. I entered in here and I went up by that 25 points. 10 points is $2,000. So this entire trade, 25 points is $5,000 right now that I'm up. Now I want, since I got in here, I want to start trailing my lows. So if price comes back, it takes me out of my stop loss. That's fine with a small contract. That's fine with a small contract. But if I'm running 10, 20, 30 contracts, that's not okay to do. Because if this came back on me by 10 points and it hit my trailing stop loss and I got out here, I also lost $2,000 out of my trailing drawdown that's coming up behind me. Every time I go up, it goes. So I lost $2,000 from that. The trailing I have now is what, 5,000 on it? So I lost 2,000 out of that. And now, let's say the next entry I get in, I have $3,000 of drawdown left. If I enter into a trade that goes against me and I go down by and it hits trailing drawdown, had I just closed at the highest point of profit here, my trailing drawdown would be 5. So if it hit 3,000 and moved back in to put me in profit and now it took me out, I'm out. I don't have to worry about hitting that 3,000 and I'm scared because I just got to 3,000. I don't have to worry about that because the extra 2,000 that's back here. What's supposed to be there is back there. And I'm not developing habits to trade to have to worry about this. Because what? I'm only taking 5 points. And in the event that this stops at, let's say this goes up to, let's say this goes up to 10 points. It's like 9 points right here. Sometimes the candle can quickly flash out of there and be 9 points. Quickly, just flash right out of there. Go past the TP, all of that. Flash right out of there. Let's say it scales back down by 4.5 points. My trailing threshold, I need to get back above this 4.5 points or 4.25 points. I need to get back above that in order for my trailing not to matter. My trailing threshold. So if I was to close down here, I lose 5 points or almost 5 points, which is almost 1,000. I lose that. But if it gets back up here to the full 9, which oftentimes when I'm trading on the seconds time frame, it does. Now my TP is right back at the top of this highest point. So when it swings through and takes me out at that number, now my trailing threshold, it remains intact for the full amount. So now it just keeps going up like that. My profit is just going up like that. Just like that the whole time. And mind you, on this evaluation that I took, I have 0 losses on it. It's very hard to lose when you're just using 5. I have 0 losses on this evaluation. I did not lose. So I'm even developing a habit where my win rate is high too. Because 5 is extremely doable when these conditions are met. 5 and I'm out. 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 Here's the restrictions that I have in place. Here's the conditions I trade with, and I pair it with my analysis. Is it likely to get 5 from the imbalance after structure? That's possible, but it's likely to go in drawdown, reaching back into the zone as well. So why don't I just wait until we get back in? Why don't I just wait until we get to the bottom of the range? Why don't I wait until we get to the bottom of the range in order to start flexing my longs? There might be other longs that I missed. Y'all saw on stream, I was missing some of those longs that kept going up. But when it pulled all the way back into what I was expecting and tapped there, I was fine. So I trade in a manner that if my trade goes up 9 points, I'm getting out at 9. Because the limit that I told you guys, I have a limit order there. I have a limit order to take me out in profit. If it went up the full 9 and came back down, my limit is right at the top of that candle. So if this came into my trailing, once it pushed out of that highest point that it went, I'm out right here. So the trade has gone no higher than this according to my threshold. So I keep my threshold intact. And that's what I'm teaching you guys how to do. There's other accounts that won't have intraday trailing on it. They just trail you at the end of the day, or they'll trail you at the closed trade. We are trading with trailing drawdown. That's unrealized profit. That's the hardest condition to trade within. The hardest. And mind you, I'm using 10 contracts in the hardest condition to trade in under an account. But Apex, the cheapest account with the hardest condition, if you learn to trade under these conditions, any child's play for you. What? I have a whole day that I could be down 2,000 and come back into 2,000 for the whole day. Be down by 5,000 and come back into break even and nothing happens. 50K conditions are hard? Absolutely not. I'm trading on the 150K condition. I'm trading on that. Let me actually go through it to show you guys what it actually is. So at 50K, your profit goal is 3,000. I would have hit that in 2 trades. Your trailing threshold is 2,500. My trailing threshold is just about half. My trailing threshold is 5,000. Yeah, 5,000. This trailing threshold is 2,500. I'm trading with 10 contracts. So guess what? 5,000 is 25 points. There's not a lot of room to be wrong with that. On 10 contracts. There's not a lot of room to be wrong with that. So the profit goal is 3,000. I would have easily trades. But then there's a possibility of stepping into that 2,500 as well. because 2,500, what is that, 15 points? So you got to be sure that in an area you're trading in, you're getting that spike up. Once you surpass 155, it stops trailing your goal. Yes, and that's what I intend to do. I intend to get at least like 30, 40,000 ahead in a quick amount of time, and then start scaling into entries leading into deliveries. You see how we were looking at the delivery of the higher time area there, the delivery of the higher time area there. I could scale in forward to 10 contracts. It can be one here, we heading up, another one there, maybe 4 there, without having to worry about it coming back on me. Because if it comes back on me in one contract, that's what, $150 and I'm out? Because I am using stops too. So I want to go to the 300K and start being able to do the 25, the 35 minis. And you see the profit goal is 20,000 on the 300K. The profit goal is 9,000 on the 100K. Based on what I've shown you, that's achievable in one trade. That's achievable in one day. With this 20,000 profit goal. On the high amount of contracts that I use to trade, that's achievable in one day. You know, so I'm definitely gonna start showing you guys how to manage the trades that you're in, along with the conditions that cannot trade under those conditions. Intraday trailing, they cannot trade under. That's one of the hardest conditions to trade under. Intraday trailing. I'm showing you guys a way to trade without having to worry about that. Without having to worry about the intraday trailing. And if you're trading another account that doesn't do intraday, you know, I was curious, when you're trading 10 or 5 points, do you just put the stop loss behind the candle or below the area? So I answered that on stream yesterday. If I'm entering into a 1 minute move, my stop loss is going behind the S&D responsible for the break. That's also where I'm entering in, but it's on the 5 second. So I'm going from 1 minute to 5 seconds. Once I get that high ripped on the 5 second, we see the S&D responsible that it taps back into. My stop immediately comes behind that, and my entry is on that. So oftentimes the points could even be like 1 point stop, 1.5 point stop. But 5 points ripping out of it, 10 points ripping out of it is within 2-3 candles. If I already have my limit there, I'm out. So when it taps into the area on the 5 second, and you see that 1 minute candle spike up green, I'm in that candle. I am the bullish candle coming out of that area. You know, you won't survive 1 day without the charge, let alone 2 weeks. I know, but I'm probably gonna be doing this forever. Probably, maybe on a ranch somewhere, you know, under 200 acres or something like that. I'm, you know, just away from society or something like that. Maybe it'll be like that, off the grid, but I'm just right at my computer every day, just, you know, I don't know, might just turn it exclusive, you know, like really only partner with people who are willing to do their lives, like get into investing. And you can be an angel investor, you can be whatever it is out there. Just really knocking down those entries with people who are willing to move forward in life and do things differently. I got to be connected to great people as well. So soon enough, the mentorship might stop, and I might only move forward with, that group of people who are willing to really invest in some stuff and solidify what it is that they have to do, opening up medical clinics, whether they, have plumbing companies, whatever it is that they have at their disposal. If they're into that stuff, then there's my person to get help with this particular thing. So there may not be people that want to be experts in trading. Might just be people that want to be experts in whatever it is, and trading is just a vehicle to get them there. Now I have an increase in my net worth because of my network, because of pursuing this and helping people to get it as down to the T as I do, and the things they're pursuing, they could help out with those things too. It's great to know surgeons. It's great to know, primetime lawyers, doctors. Great to own facilities that they work in. Like all of those things are great too. It's great to be a silent partner in a business you may need later on to service something for you. You don't think you're going to get the best quality from that medical clinic you own? From that hospital you donate to? From like it gets a lot bigger than just clicking the button behind, a chart. So I eventually want to move into that. There may be a time where I'm done teaching. It's like, no, man, I don't do mentorships anymore. Sorry, And there's just that silent group in the background that we running up, accounts on certain things. So it'll eventually move into that, but I don't think I could do the public teaching thing for very long. It just seems, insane. I feel like I lose my mind. But yeah, I want you guys to understand that this is exactly why I'm trading the account this way. That exact explanation I gave you for the conditions of the account, and to be able to trade on a higher lot size and be able to take more for less. It comes with specific rules, and it's the rules that I'm teaching you guys here. So I want you guys to be able to trade on 35 contracts. Just take 5 points on 35 contracts. And that would be, 35 points on 5 contracts. 5 points on 35 contracts. And guess what? You're doing that on 20 accounts. Yo, you ain't gonna, it's gonna be wealth like you never imagined in your life. Like if I continue to do these 10 contracts on 20 accounts, and I meet that 10-point minimum, or let's say we do 20 points in a day, look at what that becomes. Now, if you can do 30 contracts on the same amount, I mean, you pulling in damn near 6,000 per trade. Let's say you taking 5 trades now under 20 accounts with those same conditions. That's with 10 contracts. You up the contracts to 30. 30 contracts doing 10 points, taking 5 trades. That's absolutely mind-blowing kind of money you could make. And you're doing it what? With the same simple setup that you have now on the 1 contract, on the 5 contracts, on the 1 micro, on the 10 micros, whatever it is. It's the same simple move that you are taking. Nothing is changing. Same level of simplicity. But your growth is out of this world. Why? Because you can just add another account to tag onto it. Another account to tag onto that. 1 account ends up being 3. 3 ends up being 5. Then before you know it, you at 10. Then you at 20. Then you're at 30. And if you're running up 30 accounts on 30 contracts, taking 10 points, your weekly or monthly salary looks crazy. You could end up you could end up doing $1 million a day. You could end up doing $1 million a week. And you still pushing the button on that little old 10 points. You guys got to expand it out. Stop thinking about the 100-point move. Stop thinking about executing and taking a 15-point whatever. Start focusing in on that one area, that one setup, and understanding that you can reproduce that at a higher value across multiple accounts. And, you know, before you know it, your net worth starts to skyrocket. Your net worth starts to skyrocket. And you guys are going to have access to me doing that throughout the rest of this year. I'm getting ready to pay for a ton of larger funded accounts, not have to work so hard. Those little 100K accounts I have, is so using 2 contracts on them is not even worth what I'm doing now. That's why I'm saying that if you guys just went to backtest or demo test, if you guys went to demo 10 contracts, demo 15 contracts, demo 35 contracts, demo that amount of contracts, whatever your end goal is. If it's 15 contracts, if it's 10 contracts, demo that. See what your habits right now are measuring in terms of those same metrics on a higher account. Because if you go up to a 10 contract account and you sitting in $5,000 drawdown, you know that habit will cause you to lose that account immediately. So now you're going to start treating the trailing threshold as something that you got to, you know, consider when you up your lot size. You may not have to consider it now, but you can consider it. You have to consider it later on if you're going to up. Everybody here has a goal of trading with size. That goal of trading with size gets us to wherever we're going a lot faster. Wherever it is that we're going, a lot faster, size can get us there. Size. But you need to understand that there's trailing amounts that's within this that could mess you up. Whether it's the daily drawdown, whether it's the trailing threshold, whether the loss limit on the account, and more size with a smaller move can get you there. All you got to do is stalk and wait for that move. Just stalk it out and wait for that move. Or go trade it in London. It's so easy to trade London, easy to trade Asia. Now you're talking about 3 points? 3 points in Asia? Oh my gosh. So you guys are going to see me scale these accounts up over the next few months. And I'm going to show you guys why it's better to pay attention to what it is that I'm teaching you over what it is that you want to do. Because when you see you quickly end up funded by $1 million, $2 million in funding, you quickly end up on that side. You're, first of all, 100K account, 20 accounts on a 100K account, you'd have 2 million in funding. But if you could use 20 accounts on 300K accounts, then that kind of funding looks different. These same things that you're funded by, that could be a part of a service that you contract for whoever it is. You could end up showing that you have access to and you also manage $6 million in funding, manage 10 million in funding. And that's something that could start to work for you as well. Open doors for certain business loans you may be able to. Then you might use those business loans to buy more funded accounts under said business. And now your personal accounts are pulling in 20 accounts with 30 micros or 10 micros, whatever. Then the business accounts are pulling in even more. Yes, you become the bank. Exactly. And your life quickly changes over the span of the next 3 years and puts you on a trajectory that you could never even work your entire life towards. You could never even work your entire life towards it. Why? You just joining a man on a mission and following his exact steps and seeing that it's doable. I didn't know about funded accounts when I first started learning how to trade. When I first started trading, I was pulling out tens of thousands of dollars from an unregulated broker, only using $6. Now you got access to this kind of stuff. It's insane. Why would I want to pay futures taxes when I can pay taxes through LLCs, S corps, and also create far more write-offs? I could write off a vacation because I went there to visit some place and talk about something. Had a meeting with friends and was talking about finance in the meeting. Now the entire vacation is written. I'm telling you, it gets so much bigger. It gets so much bigger than just these pushing these buttons and stuff like that. You got to think ahead of it. It's not just about getting the money. You got to think bigger than that. So now, when we're thinking as big as we are, our stop losses, we start to consider risk, and we want risk to be smaller. We want reward to be larger. We want time not to be a thing for us. So why am I going to sit down and hope that I fulfill a 100-point move on 2 contracts when I can take 20 and 30 contracts and just get 4 or 5 points on that? If I can get 4 or 5 points on 30 contracts and take 6 trades in a day, you see what the end of the week looks like on that? Oh my gosh. I tell you, I'm almost at 9,000 in profit with no loss. 9,000 in profit, 0 losses. And imagine if I held each of those trades to 10 points. I showed y'all the trades I was taking, areas that only went 10 points. They went far more than 10. Now imagine I was holding 10 points, 15, 20 points on 30 contracts across 30, 40 accounts. And I'm done in that, 2-3 minutes? That's crazy. Come on. So I'm trying to teach you guys that, not to tell you guys that you're wrong for holding on to trades, you're wrong for this, you're wrong for that. I've learned how to trade in this condition. And I want you guys to develop trading the same way, because as I move across to scale these accounts and all the stuff that I'm learning along with it, you would be developing a strategy or even a perspective in the market that it wouldn't take you as long to follow directly behind what I'm doing. So when I explain the trailing thing to Ziga, I want you guys to know that that's how you should develop a trading system too. With the same thing. If the 5 points are fine, price might spring up 9. And then you go and place your take profit right behind the 9 points. And then as soon as it shoots up above that previous candle, it takes you out without touching your trailing at all. Now you know how to manage large contracts without hurting your trailing drawdown or your overall drawdown. And we're talking about 20 accounts on one, platform. You could even go into accounts on other platforms as well. You can end up with institutional accounts. There's a ton of things. Y'all gonna see. You're gonna see the power of it. I'm gonna definitely talk to you guys more about it. Where do you look at the seconds time frame when live? So on the broker that I'm executing, looking at the seconds time frame on that. On TradingView, I'm looking at the 1 minute. Or you could have it to where the Ninja broker that I'm using, you could create a small box with the 1 minute time frame and then create another chart for the seconds time frame. So the larger chart, I have the seconds time frame on, and the smaller chart, I have the 1 minute time frame on. So I still see a 1 minute overhead, like looking at, and then I'm using the seconds time frame to judge where my entries and stops may be. But it doesn't look too far apart, the 5 second to the 1 minute. It doesn't look so far apart. But you're going to see when the 1 minute forms that wick, that stab is actually going to just be a V shape on 5 seconds. And that V shape is going to take out a high to the left side on the 5 second, and all you wait for is the S&D for responsible for the break of that high. All you wait for is for that to get in. That springs you at 10 points immediately. Sometimes you could have price come down and run the S&D after it has delivered and trade further into the wick and then trade up again. But you're going to see all of it play out through both time frames. That's why the 1 minute is my hourly and the 5 second is the time frame that I enter on. But you guys can see, you end up living anywhere in the world. Taxed as much. There's going to be a lot that changes, but it starts with your mindset. And what's the first thing we got to get rid of? Greed. We got to get rid of that because greed is the thing that causes us to lose. Trailing threshold means that you have no greed. You're taking a profit immediately when you see it. That's what trailing threshold does. It takes out your desire to be greedy, and now it causes you to develop a system to be extremely systematic on. There's a logic behind it. If then, that's it, nothing else. You always adjust to that, you know? I got you. I'm gonna use what you said. Yes, that's exactly what you're gonna see, that you are the bullish candle coming out of that area. You are the bearish. I am the bullish candle. Yes. Yes. So you're gonna see that when you trade down on the 5 second and you're in a 1 minute zone, you're gonna see that candle moving out. You're literally the bull. I say it say it in a joking manner, but it's still true. I am the bullish candle. Yeah, so then your confidence becomes different. You gotta work reason. Know that it's gonna hold. And guess what? You know it's gonna hold not because 100% is gonna hold. You know that 99% of the time that you tested it, it worked. 99% of the time when you back tested this entry, it worked. 99% of the time. And that's both short or long. That's a lot of back testing, y'all. So if you go and back test all of those entries you guys see me grab, all of those different narratives that I give for long, you're going to see that your win rate alone just quickly picks up because you're being very picky on where you put your money. And it's only going to be in those high probability areas. Only. So, hope you guys learned a little bit, at least with the back testing session that we were just doing, and how you could effectively scale these accounts. Again, I have 0 losses on an account that I'm almost at the profit target that I've only been traded for 3 days. That could be something that you can do multiple times a week. Every week you can be taking an evaluation just to run it up. Over the next month and a half, you'll see that you were just able to take one account to 10 accounts in just a month and a half. By the time you know it, you're getting paid out $2,000 per month for each account. So your minimum income over the next 4 or 5 months could end up being $20,000 a month. It could start $2,000 next month. The following month, that could be $4,000. The following month, that could be $6,000, depending on how fast you pass these challenges. But you could pass one challenge a week. And on the other side of a month and a half, 2 months, you're already at 8 accounts. And then by the end of that time frame, the 5th month, you could already be pulling 10 to 20,000 in a month. That first 20,000 you get could already change your living circumstances. And after that, there's no cap. What? I'm telling y'all gonna see. Just stick around. We got a lot of work to do. I got a lot to look into. I haven't been active in it because I've been, obviously absorbing all of this information, going back over the stuff that I'm trading with and refining that, keeping that stuff at the forefront of my mind, looking at more ways to shore up funding, more ways, like a ton of different things that I'm doing on top of still learning how to DJ, all like I'm just doing everything with every ounce of my time that I feel like there's. And that's exactly how it feels. It feels like it's not enough time. I thought that, there was, and now I realize. So, I'm gonna make sure I get that stuff back to you guys. Give you guys applicable ways to, do everything that I'm currently doing now. And again, before you know it, guys, this will be more of a family that actually is, a trading group. You guys are experts in a ton of stuff that I don't even know. You guys are experts in cars, experts in tech, experts in whatever it is that's out there. You guys are experts in a ton of those things too. You literally create a family here, but it has to be people of the same mindset. It literally has to be people that's willing to walk the way that's given. I know how to make the money. So I'll tell you guys that you find ways to make whatever it is on the other side, So I hope you guys enjoyed that. I know I always sound like a bro, but hope you guys enjoyed it. I'm gonna put it on YouTube right now. I'm actually doing it as we speak. So you guys could get access to that, but you guys could also see the reasoning around those different areas. Those same areas show up. They show up every session. They show up. And if you guys can just take 5 points off of each of those, it would be something that, would help you guys. So I'll see you guys soon. I'll be back tomorrow for market open. I think I'm going to do a macro for tomorrow. I'm not too sure. But I think I'm going to do a macro thing where we look at what the next few months are going to happen, like what's going to happen over the next few months with currencies. And we'll go into the monthly chart and just look at the month. That'll look like it's bullish. So anybody that's in those countries and got the opportunity to trade in different, get paid in different currencies, just know that the dollar is getting ready to have upside to it. So that might very well affect whatever over the next 2 months for like anybody that has to deal with exchange rates. But I'll consider doing a macro tomorrow, but we'll see. I'll catch up with you guys soon. Later, y'all.